All right, so this is part 2 of the Sistine Research TradingView Indicators tutorials. We're going to be covering margin pressure levels. This is the concept that has probably made me the most money in crypto trading. Obviously, it's not going to be a end all be all. You've got to be able to still manage risk and manage trades accordingly. But this is the concept that I used 2 weeks ago to trade Shiba Inu and made $30,000 on a single trade, which for a lot of people, that's obviously a lot of money. For some traders, that's not much at all. But for me, it was a really, really solid trade, and I'm going to explain the concepts. So at the end of this tutorial, you're going to understand leverage trading incentives. You're going to be able to isolate for those leverage trading incentives, and you're going to be able to use that knowledge to identify hidden support and resistance levels. Again, I want to reiterate, this is not something that this is not an indicator that you can just blindly buy and sell resistance with, right? You still have to have some nuance. You still have to be able to manage risk accordingly. However, these margin pressure levels that we're going to get into in just a second are very, very strong support and resistance levels that you will otherwise not see on a chart with other methodologies. So I'm just going to show you guys an example real quick. So right here, going back to the kind of first half of the bull market here, we're in price exploration mode. How do we find resistance? How do we find when Bitcoin's never been to this region before? How do we know it's going to top out here ahead of time? And of course, we can't know with 100% certainty, but how do we know that there is resistance at $57,185 if Bitcoin has never been there before, right? If we go to the left of the chart, there's no way that we can tell, we could say, oh, there could be some resistance at $50,000 because that's a round even number. And we'll get into that. That's going to be part 4. We could say there's going to be some resistance at $60,000 or $100,000. Sure. But why is it that Bitcoin did this? Why did Bitcoin go to $57,600 or so and then come back down and correct down to this green line? Those margin pressure levels. So I'm going to explain how these work, why they work. So first of all, why they work is because the market's extremely leveraged. The crypto market, especially in a bull market, is extremely leveraged. Now, if we understand the incentives of leveraged traders in the market, we can identify where those incentives increase and or decrease and project support and resistance, or predict the behaviors of those leveraged traders in the market. And we know that price action is simply a function, or it's ultimately dictated by the behavior of participants in the market. There's either buyers or there's sellers, right? And the culmination of those buyers and sellers is just what ends up being price action, right? Okay, so this example here, we had Bitcoin made a large correction from $42,000, ended up putting in a local low at around $28,800. All right, so as we're starting to see Bitcoin move back upwards, we know that a lot of longs, a lot of buyers are coming into the market. We break the high, we make a new all-time high, and we just continue this trend upwards. But where are we going to get resistance? Well, first of all, we can start to understand that leveraged traders in this market, and by leverage, I mean, somebody who has, let's say, $1,000 and wants to buy more than $1,000 worth of Bitcoin. You can take a loan basically from the exchange or a margin from the exchange, and you can, on 5x leverage, buy $5,000 worth of Bitcoin. But as soon as your $5,000 Bitcoin position goes down by 20%, or in this case, $1,000, you're going to get margin called or liquidated, right? So essentially, the exchange is going to take that $4,000 left over of Bitcoin after a 20% drawdown, and they're going to sell it, and you're going to lose your $1,000, and of course, the exchange isn't going to lose anything. So that concept, if we understand it, we can calculate and isolate for leverage trading incentives in the market. So we know that there's a lot of people that viewed this as support, right? We saw demand, we saw these wicks come in this general region. So we know this entire region, right, is support. But then when we actually made the swing low at 28.8K, we know that a lot of buyers are going to be wanting to hide their liquidation points below this level. Why would they want to hide their liquidation points below this level? Well, because we put in a local low here, a macro structure local low. It's very unlikely that as so long as we're in an uptrend and continuing to make higher highs and higher lows, it's very unlikely for us to make a lower low. Right? So we would have to make a lower low and completely break market structure in order for this, for price action to come back down below this region, right? And eventually we did, but it was after we broke market structure, right? So, a lot of traders are going to be wanting to hide their liquidation point below 28.8K. Okay, well, how much Bitcoin can they buy on leverage while maintaining a liquidation point below this level? Well, as soon as the price of Bitcoin goes above $57,600, as dictated by our long margin pressure level indicator here that we put onto this local low, as soon as price goes above 57,600, you can no longer go long on 2x long leverage while maintaining a liquidation point below this local low. So the incentive to buy on 2x long leverage greatly diminishes. And we don't really have another local low all the way down. We don't have a correction and a new local low for people to hide their liquidation points, right? Right? What's the next local low up? It's right here. It's right next to it. So we drag this over, right? And it's essentially the same thing, right? It gives us a slightly higher level of 58,301, which was actually the exact top, right? This local top. But then where do we actually see the correction come down to? Where do we actually see buyers step back in? Where do we see support off of this correction? Well, we see it come back in at $43,200. Why? Because the second Bitcoin's price drops below $43,200, leveraged traders in the market can start buying on 3x long leverage down here and maintain a liquidation point below this local low. So the amplification of capital that you can buy while maintaining this risk profile of a liquidation point below this swing low goes up at this point in time, right? So you see this manifest as support and resistance, right? And the same thing applies to the shorts as well, right? Once we made this kind of local high, we made our all-time high at the time. We made this lower high. Leverage traders in the market. Let's grab our short margin pressure levels and drag them over here. So we drag these short margin pressure levels over to kind of this, I guess, right shoulder of your head and shoulders, whatever you want to call it. But it's your last local high before we really started spilling off. Okay, where did we end up finding support? We ended up finding support under $29,800. Why? Because that's our 1x short margin pressure level. That's the point at which you can no longer short Bitcoin and maintain a liquidation point above this last local high before we started spilling off. Right? And you see a lot of price action bounced in this 2x to 1x short region. Because what happened? Because as soon as we got these dead cat bounces, right? As soon as we got these bounces back upwards, the shorts wanted to come back in. Because look how bearish it looked. So where did the shorts start coming back in and pushing price action back down? Above $39,735, right? Above this level. Because once price action moved above this level, you can then short Bitcoin on 2x short leverage and maintain a liquidation point above this local high. So on and so forth, right? And these levels can continue to be relevant onwards into the future. And obviously you can run these levels off of essentially every local high and local low. And you can create a chart that looks somewhat like, we'll call it like this, right? Where you get these support and resistance clusters, right? And I'm going to be, in part 5, showing you how to create these support and resistance clusters so that you can identify support and resistance, strong areas of support and resistance, and make, and develop a trading strategy based off of it. That's how I personally trade, right? This is a chart that I've personally been trading, looking for longs down here, closing the trade at this support and resistance cluster, farming these bounces, right? Getting stopped out here and flipping short, buying $20 exactly because we have multiple levels down here, right? So this concept is very, very powerful once you start to understand it and applying it in a strategy that works for you. I mean, I'll go through a couple other examples, and you know, where did we recently find our local high for Bitcoin? It was at $31,000. Well, is it any coincidence that that's where we found our local high when that is also the point at which you can no longer go long on 2x long leverage and maintain a liquidation point below our bear market low, right? This is the perfect top, right? Now, it's not going to be perfect every single time. Like you can see there were plenty of interactions, price action interactions with these other levels here that we passed through, and then we built support, and that's bullish, and we zipped up to the next level, and we had deviations, and it wasn't perfectly clean every time, but you can see how price action interacts with these levels, right? They're very important levels to keep in mind and trade around and to develop a trading strategy around. Do I want to just blindly short this level as resistance with, you know, no regard for where my stop loss is or no regard for what price action is doing? Of course not. But if I can build a strategy that factors in this methodology and these leverage trading incentives into the methodology to identify support and resistance, then I can start to develop an edge as a trader. And that's all margin pressure levels are doing in a very highly leveraged market. The crypto market is a very highly leveraged market. Now, it's a little less leveraged now than it was in the bull market, but as markets go, crypto is very, very leveraged. Okay. These work for any asset that trades on leverage, any asset, any top, you know, the top 20, 30 cryptocurrency by market cap. Obviously there's many other ones, lower caps that do trade on leverage to some degree, but I've found most success, you know, with large to mid caps because there's liquidity, there's volume, and you know, there's a high amount of, you know, speculation going on those coins. Yeah, that pretty much sums it up. In the next video, we're going to be talking about risk reward levels and isolating for risk reward incentives in the market. But even if you don't have the Sistine research indicators, which you can grab at Sistine.ai, even if you don't have them, hopefully this concept will at least, you know, help you in your trading or help you in your investing journey at some level. It's a concept that you don't see brought up frequently. This is, you know, these indicators were designed by myself. I've not seen them anywhere else. It's just not something that's super common out there. You know, and then also when you start messing around with these indicators, you'll start noticing pretty big patterns. In that, for example, a very common, you know, recurring pattern is a 2x to a 3x retracement, and vice versa. So oftentimes in times of volatility, you'll range between the 3x and the 2x. I'm not saying that that's what we're going to be doing right now, but it's something that we've seen quite a lot in the past, right? We saw the two on the short levels, the 2x to the 1x short range here, right? Pretty common. Guys, thanks so much for tuning in. If you enjoyed the video, like, subscribe, follow on Twitter, so on and so forth. Check out the indicators at Sistine.ai. Peace. Add on here, I forgot at the beginning of the video, I talked about the Shiba Inu trade. I was going to walk through as an example. So basically, what we have here is our 3x long margin pressure level, this green line right here. And we also had a bullish catalyst coming with the launch of Shibarium that ended up flopping, and price action, you know, came down as a result, and we had these large liquidations. But none of that matters now because what we caught was just the big run up. Actually, we entered here and I exited there. Right. But we had a bullish pattern here, right? In an ascending triangle, right? We had a bullish catalyst coming up. So my bias was to go long. How did I know where to go long? Well, we had our 3x long margin pressure level that we ended up holding multiple times, right? On the back of this downtrend line, giving us a really clean trade setup. One of the few that's, you know, you see it and you know it's worth it's just going to print. And we also had a really clean invalidation. We had multiple trend lines, you know, the uptrend line down here. We had our 1x short margin pressure level here. We had a 3-to-1 risk reward level, which we'll talk about in the next video. And then we had our margin pressure level here to enter on top of the trend line, right? And then where did we take profits? At 1050, 1050. Why? Because that was our 2x short margin pressure level. So we were actually able to capture the entire move here, the entire initial move. Obviously, it retraced quite a bit and then went again, but this was a very, very successful trade. And this was, not strictly using margin pressure levels, but margin pressure levels were probably 60 to 70% of the analysis behind the trade as far as looking for our entry and our exit. And just to reiterate, our long margin pressure levels, guys, like all you do is you drag it over to the local low or the local high if you're looking for short margin pressure levels. And this is going to automatically calculate those leverage trading incentives in the market. See, this is our 3x long margin pressure level. It's the point at which you can no longer buy, or rather, as price is approaching from above, it's the point at which the market can start going back in to Shiba Inu here at 3x long leverage while maintaining a liquidation point below this huge wick low, right? So those buyers come back in, and that's where you end up holding support. Thanks.